Hello everyone, warm welcome to Super Coaching Regulatory Bodies YouTube channel by Testbook. My name is Madhav Sir. I welcome you all in the next session of Finance Current Affairs, and today we will be covering the Finance Current Affairs for 19th till 21st of June 2025. I'm pretty sure, as always, this session is going to be really very important, and as you all know that RBI Grade A notification is out, and keeping that in mind, this session holds more importance in your preparation, because in that particular notification, I don't know whether you have gone through with the notification or not, but in the notification it is clearly mentioned current affairs from the financial sector, which means majority questions in the current affairs segment will be asked from finance section itself. So keeping that in mind, you should prepare in much more appropriate manner for not only your RBI Grade B examination, but also for the PFRD exam, where these sessions, that is the finance current affairs sessions, are going to be really very important. If you think that we are good to go, video and audio is correct, and we are good to start with the session, just give me yes sir, so that we can begin with the discussion without any further delay. So quickly type yes sir in the comment section so that we can start the discussion without any further delay. Quickly everyone. Okay, so the moment we begin the discussion for the finance current affairs, I would like to inform everyone that if you want to understand the RBI circulars, master directions, press release, notifications, as well as RBI bulletin, this is a one-stop solution for all the RBI website important areas for your examination. You can download the PDF of this session, which is available on my Telegram channel, and the handle is @Madhav, or you can just type and search economics by Madhav, and you can reach on this particular Telegram channel to download the PDF. In the PDF, I also provide you the MCQs based on the today's news. So if you want to solve the MCQs based on today's news, the MCQs will be available in the session itself, or it will be available in the PDF itself. So the moment you will download the PDF, you will even find out the practice question, and you have to share the answers of these practice questions in the comment section of the given video. Chaliye, so let's begin our discussion with the first news. The first news is related to World Investment Report 2025. So the World Investment Report 2025 is presented by United Nations Conference on Trade and Development. Remember that this is not the very first time that this report has been presented. It is an annual document. This report is presented by UNCTAD on annual basis, and it highlights the global trends in the foreign direct investment. We know that due to the geopolitical tensions which have further increased due to the current Israel and Iran issues which are prevailing, along with that we have geographical fragmentation plus the trade war which is going on in the current scenario. These are the reasons which are not only impacting the global trade, but these reasons, they are also impacting the foreign investment. So keeping in mind all these parameters, all these issues which are prevailing in the economy, United Nations Conference on Trade and Development has presented the data for 2024 as well as 2025 in the data has been presented for 2024, and the name of the report, or the title of the report, is International Investment in Digital Economy. So they have not only talked about the foreign investment as a whole, but they have also highlighted in this particular report, it has been also highlighted the international investment in digital economy, and this particular report was presented back in Geneva, Switzerland. So remember one point which is really very important for you all guys. The point says that this report which we are talking about, so this report is not a new report. It is something which is presented on annual basis. It's an annual publication presented by UNCTAD, and remember that it discussed the global trends, specifically highlighting the foreign direct investment, offering the insights at both regional as well as national levels, and explore the new strategy to enhance FDI role in supporting the development. So this particular report, it gives us the picture, what is the current foreign direct investment scenarios of the country and how these foreign direct investments are shaping, are helping the regional economies, the national economies to grow as well as to develop. Got it, guys? Now, whenever this kind of report is presented, you must remember that there are three important areas which you need to focus from this particular report. The first area is the global trend, that what is the overall foreign direct investment trend in the country. After the global trend, you must have data collection. You must do the data collection for the nation, obviously India, that how India is performing. And after that, you must collect the data specifically related to the continent in which India belongs, that is Asia, as well as try to collect the data corresponding to South Asia. So if you have done this much of the homework from a particular report, that is more than sufficient. And I don't know how many of you have gone through with the PDF, but the PDF of this particular report is around 250 pages. So out of those 250 pages, I have shortlisted all the important data on these three grounds, that is the global data, then the data related to the nation, and then data related to India surroundings, that is Asia as well as South Asia, which we will be discussing. And all the data which I'm going to discuss is important, and you need to remember that data for your upcoming examination. Here we go with the first point. The first point talks about the global FDI flows were said to be 4% higher, which totals around $1.5 trillion. But please pay attention, but the number was boosted by unstable investment passing through certain countries. Without counting those, the global FDI has actually dropped 11% and falling for the second year in the row. Now the question is, sir, ek taraf the data is saying that FDI has grown by 4%, and on the other side, the data is showing, or the data is saying that FDI has been dropped by 11%. What is the answer to this particular question? Then my answer to this particular question is, please pay attention on the screen, guys. Let's suppose US based company is investing the funds in Mauritius, and the investment is done in Mauritius into a subsidiary company of US, and from the subsidiary company of US, this investment is done in India. Why this has been done? Rather than investing directly, in order to enjoy the tax benefits, in order to enjoy the tax haven scenarios which are offered, this initiative has been taken. But if you are calculating the foreign direct investment, what you will say? So foreign direct investment, what you will say? So foreign direct investment has been recorded. Foreign direct investment has been recorded where? So the foreign direct investment has been recorded in Mauritius. Even you will say the foreign direct investment has been recorded in India, but practically actual foreign direct investment is from US to India alone. So when we subtract these unwanted, when these unwanted areas are subtracted, these unwanted or unstable investments are subtracted, we get the actual FDI rates. So actual FDI rates have dropped down by 11% in comparison to the previous year, and this is the second consecutive year for which the FDI has witnessed a downfall. Is this point clear? So FDI dropped by 11%, falling for second year in the row. But if we talk about the overall data, considering the unstable investment data, this is witnessed to be around what? So this is witnessed to be around a value of 4%. Is this point clear, guys? If it is clear, just give me yes, sir. Now moving on to the second point, which is important with respect to the global scenarios. The second point is, which of the continent is majorly impacted with respect to the foreign direct investment? So I would say the most affected region is Europe. So remember that if someone asks you, name the most affected region which has recorded lowest foreign direct investment in comparison to its past year data, then I would say the most affected region is none other than that is Europe. So the third point is FDI in the developing countries. FDI in the developing countries like India and the other developing countries has remained stable at a value of around $867 billion, which is 57% of the global FDI. So remember that 57% of the global FDI is recorded alone in the developing countries. Alone in the developing countries, and the value of this foreign direct investment is $861 billion. Moving on to the next point, top 20 economies, significant declines were noted. So in the top 20 companies, we have witnessed a significant decline in terms of foreign direct investment or in terms of inflow of foreign direct investment. One is China, then France, then Italy, then Sweden, as well as Saudi Arabia. Now there is a term mentioned, host economies. I don't know how many of you are aware of this particular point, but if I explain you this particular point, it's very easy to understand, guys. Please pay attention. What I'm trying to say, whenever a foreign company is investing, in order to get into the process of operation, administration and management, we call it as FDI. So the country in which we witness inflow, of FDI, we call it as host country. But the country from which this investment is done, we call it as source country, or it is also known as home economy. Here we use a word, host economy. Is this point clear? So in terms of top 20 inflow accepting nations, out of top 20 nations, China, France, Italy, Sweden and Saudi Arabia, they have witnessed a decline. But on the other side, US is as always on the first rank, both in terms of inflow as well as outflow. So what I'm trying to say, so US is on the first rank in terms of outflow of foreign currency. That means it is on the first rank in the category of source economies or home economies, and even it is on the first rank in terms of host economies. That means inward foreign direct investment is highest in US, and even the outward foreign direct investment is highest from US, which you need to remember over here. Yes, that is the reason, Tina, I have said that in general, foreign direct investment is set to increase by 4% with a value of around $1.5 trillion or $1.3 trillion, but actually it has declined by 11% if we exclude the unstable investments which are done in order to enjoy the tax benefits and all. Is it clear? Moving on to the next point. Now, let's welcome the content related to India. If I welcome the content related to India, then my answer would be, first point, India emerged as the leading recipient of FDI within South Asian region. The moment I say South Asian region, I talk about 8 nations, that is MBBS Spain, where N stands for Nepal, I for India, A for Afghanistan, P for Pakistan, S for Sri Lanka, B for Bhutan, B for Bangladesh, M for Maldives, Myanmar or Mauritius. Give me the answer in the comment section. So these are the 8 nations which are collectively termed as South Asian nations. If I talk about India, so the FDI inflows has declined in India by 1.9% in the year 2024. Second point is India's ranking for FDI inflows. So if I talk about India's ranking in terms of FDI inflows is 15th, which has improved from 16th rank. This is in terms of inflow of FDI. And on the other side, if I talk about the outflow of FDI, in terms of outflow of FDI, India's rank is 18th, which has improved from 23rd. The next point is India has secured the 4th position globally in terms of, so if I talk about greenfield projects, what are greenfield projects? So when the investment is done in order to initiate the project, in order to start the project from scratch level, from zero level. For example, a foreign company is investing in India And in order to start their business, first they will purchase the land, then they do the construction. Once the construction is done, then they will be setting up the manufacturing unit. They will be purchasing the machinery, start the manufacturing unit, and then set up the sales unit, then set up the service unit. So this type of investment, we call it as greenfield project, which is started from scratch. So in terms of greenfield projects, highest number of greenfield projects are funded in US. Second is UAE. This is important. On the third rank, we have UK, but more important is the fourth rank, that is India. So India is on the fourth rank in terms of number of greenfield projects being initiated through the foreign direct investment done in 2024. The next point which is important is that is project finance. Have you heard this term, guys? Project finance. Recently RBI has come up with the guidelines related to the same term, that is project finance, which we will be discussing in the next session, so nothing to worry. But the question is, what do you understand by the word project finance? Then my answer to this particular question is, a project finance is a general term. We can call it as a funding model, which is basically used to finance large scale, long-term infrastructure projects or industrial projects or maybe developmental projects where the repayment is primarily based on the project future cash flow rather than the financial strength of the project sponsor. For example, NTPC is borrowing loan to construct a power plant. In that particular case, it will be called as project financing, where the repayment of the loan will be done on the basis of the cash flows which the power plant is going to receive once the power plant is completed, once the power plant is selling out the produced electricity. In that particular scenario, power plant will be in a capacity to pay back the borrowing. So that type of financing where we make this, or we consider the project cash outflow, where we consider the project cash outflows as well as inflows as a basic criteria or the primary criteria to decide the repayment of the loan. That type of financing is known as project financing. That type of financing is known as project financing. So in case of project financing, India is on the 5th rank. In case of project financing, India is on the 5th rank. So India has scored 5th rank in terms of international project financing, where India has received 97 deals during 2024 and India has received 1080 greenfield project deals in 2024. So this is very, very, very important data which you need to remember. Along with this, if I add the data which has been shared with us by RBI in the past, in its RBI's annual report, it shows that in 2024-25, if I talk about India's gross FDI, so India has recorded a gross FDI of $81 billion, which has increased by 14%, if I'm not wrong, please check it once. But on the other side, if we talk about net FDI, so net FDI are recorded to be $0.4 billion only. Net FDI is $0.4 billion only. So please check this once. This is something which you need to remember for sure. Please check this percentage wala part. Is it correct? The rest is correct. I know that, but I'm not pretty sure about this percentage. So you just quickly check whether this percentage on year basis growth is correct or not. Now coming back to the data which is presented on the screen, the data says that if we rank the countries on the basis of host economies, that means inflow of FDI. So highest inflow of FDI in the world is recorded in US. On second rank we have Singapore. On third we have Hong Kong. On fourth we have China. On fifth, this is important because it is something out of the box which has come up in this list, that is Luxembourg. So it has witnessed a great jump, not only in inflow but also in the outflow wala part. So in that particular context, you need to remember this. This is very important. India's rank is 15th. US is again on the first rank in terms of source economies, but Japan is on second, In terms of source economies, China is on the third, Hong Kong is on the fifth, and India is on the 18th rank. So you need to remember US, India, and Luxembourg data. Rest you can ignore. Here you need to remember all the data that is important. And on the previous slide, I would suggest you to remember the data that is FDI in developing nations 57%, and remember the data regarding the 11% wala format. Rest is doable, nothing else to worry about. Now let's move on to the last segment. The last segment of this particular news is, as I said, related to Asia and South Asia. So in terms of developing Asia being the largest recipient of FDI inflows, this year it has observed a decline of 3%. So Asia has observed a decline of 3% because China has witnessed FDI inflow decline of 29%, which has led to the overall decline of Asia's inflow FDI by 3%. If I talk about Southeast nations, I'm talking about which nations? I'm talking about the Association of Southeast Asian Nations. I hope you remember about these ASEAN. It's a group of 10 countries, if I'm not wrong. It's a group of 10 countries, and these 10 countries include what? So these 10 countries include Thailand, Vietnam, Indonesia, Philippines, Laos, Cambodia, Singapore, Brunei, Malaysia, so 1, 2, 3, 4, 5, 6, 7, 8, 9. We are left with one more, that is again M. So can you please give me the answer? Can you please give me the answer? Name the members of ASEAN nations. Members of ASEAN nations. As you can see, first one is Thailand, then we have Vietnam. After Vietnam we have Indonesia, then we have Philippines, then we have Laos. After that we have Cambodia, then we have Singapore, then we have B for Brunei, then we have M for Malaysia, M for Myanmar. I don't know how many of you know this trick, but I can give you a trick in order to remember. How I remember these names? TV पर IPL चल रहा है. Please pay attention. TV पर television, TV पर IPL चल रहा है. लेकिन मेरा SBI मेंस का एग्जाम है. SBI मेंस का एग्जाम है. So you can remember with the help of this particular trick all the 10 member names. TV is Thailand, Vietnam. IPL is Indonesia, Philippines, Laos. C is Cambodia. S for Singapore. B for Brunei. M for Myanmar. M for Malaysia. Is this point clear, guys? So these are the 10 members. And if I talk about Asian nations, this is very important. Why? Because they have recorded an increase of 10%, and this has helped them to reach a record high of $225 billion. So this is important because they have reached to the highest or record high foreign direct investment of $225 billion with an increase of 10%. Along with that, there are certain investment related issues which are prevailing, which are addressed in this particular report. This report has addressed that there is a continued deterioration of investment flows into key sectors aligned with scheduled development goals was observed. Remember that investment in energy and gas supply sector has fell by 28%. Project finance in the renewable energy declined by 16%. Greenfield investment in the digital economy was grown from $131 billion in 2020 to $360 billion in 2020, and most of the foreign direct investment in digital economy has been done in the 10 developing countries of India, out of which one is India itself. Then we have energy and gas supply retain its position as the top sector by project value, accounting for 14% of the total cost. So energy and gas is the first, it is the top sector in terms of the value. Then digital economy, or in terms of digital economy, the investment has increased by almost 3 times, from $131 billion in 2020 to $360 billion in 2024, and most of the investment is in 10 developing countries, out of which one is India. We have done, guys. I hope it is clear. All the aspects are clear to this particular news. So if I conclude my discussion, what all data you need to remember from this particular news which can be asked in the examination, then the first is global FDI 4% increase to a value of $1.5 trillion, but if exclude unstable investment, then global FDI, please pay attention, guys, global FDI has reduced by or decreased by 11% for the second consecutive year. Most affected sector is none other than Europe. Most affected sector is none other than Europe, country or region is Europe. Developing countries, they record 57% of total FDI, which is $868 billion, if I'm not wrong, $867 billion. Then China has witnessed a decreased FDI by 29%. US is on the first rank in terms of inflow as well as outflow values. If I talk about India, so India is on the 15th rank in terms of inflow of FDI. India is on the 18th rank in terms of outflow of FDI. Overall FDI in India has decreased by 1.9%. India is on the 4th rank in terms of greenfield projects, and India is on the 5th rank in terms of project financing. Then if I include any other data which will be helpful for us, that is ASEAN nations have recorded increased FDI 10%, and they have reached to a record high value, and this record high value is $225 billion. Last but not the least is your digital economy. So digital economy foreign direct investment has increased from $1.31 billion in 2020 to $360 billion in 2024. The data which I have written for you on the screen is something which you need to remember. हर बार पूछते हो what to remember, what not to remember. So I have given you the answer, what to remember, what not to remember. Clear hai ji? Give me thumbs up if it is clear so that we can move ahead. Do we have to remember the exact numbers? Aditi, I have given you the answer. So what could be the key driver that help India to get 4th rank in greenfield FDI? India is a developing nation, and in developing nation there is always a prospect of innovation, new investment, as well as the expansion of the existing sectors as well, which always results in increase in, or which always pushes the greenfield FDI in the nations like India. Moving on to the next point. The next point is really very important. It has not yet covered till now, as I was going through with a number of YouTube channels, but this news has not yet been covered. So this is really very important. A direct question will be asked from this. The news is priority sector lending. We all know that priority sector lending basically means every bank is responsible to provide fixed percentage or predefined percentage fixed percentage or predefined percentage of its adjusted net bank credit, adjusted net bank credit, adjusted net bank credit, or there is one more term with reference to the same. The term is known as CEO BSE, CEO BSE, which stands for what? Anyone can help me with this? CEO BSE stands for what? Anyone? Sir, it stands for credit equivalent of off-balance sheet exposures. So whichever is higher out of the two. So in case of private sector banks, in case of foreign banks, in case of public sector banks, this percentage is fixed, that is 40%. In case of RRBs, this percentage is fixed, that is 75%. In case of urban cooperative banks, earlier there was a target to reach to a value of 75%, but now this 75% expectation has been dropped down. Now for urban cooperative banks also, the priority sector lending limit is 60% of A and BC. In case of in case of small finance bank, earlier this limit was 75%, but from 2025-26 onwards, this limit will be dropped down to 60% again. This limit will be dropped down to 60% again. So this is done basically to decrease the foundation on small finance banks to provide majority loans in the category of priority sector. And after this announcement, or after the RBI revision, majority small finance banks, they have recorded their share price to increase in the market itself, because obviously if they will be providing more loan in the commercial sector, and commercial sector is a sector which helps banks to attract profit, and this will increase the profitability of the banks. This will increase the lending of the banks to more profitable scenarios, which has resulted in increase in price of the shares of small finance banks once this announcement was done, or after this announcement was done. Is it point clear now? Now, so what is the thing which you need to remember over here? So the thing which you need to remember over here is कि अब small finance bank की अगर हम बात करें तो small finance bank के cases में जो priority sector lending की limit पहले 75% थी, it has now been decreased to 60%. Actually, you know what? क्या था scenario? 75% was the limit, out of which 40% was even 40% was even post assigned. Post assigned means 40% में से अगर आपको याद हो तो 18% of A and B C should go for agriculture loan, 12% should go for weaker sector loan, 7.5% should go for MSMEs, and rest 2.5% of loan should go for the other categories. Other categories include your education loan, home loan, as well as your green energy infrastructure loan or social infrastructure loan. Rest 35% is bank's choice, that bank can give this 35% either to one subsector of the priority sector or to multiple subsectors. Wherever bank feels that bank can have more benefit, bank can choose those sectors out of the priority sector, out of the defined priority sectors, to compensate rest of the 35% of the lending, to compensate rest of the 35% of the lending. लेकिन अब यही जो 35% वाला फॉर्मेट है, आरबीआई ने इसे रिवाइज करके कितना कर दिया? सो फ्रॉम 35% इट हैज नाउ रिड्यूस टू 20%, जिसकी वजह से जो ओवरऑल प्रायोरिटी सेक्टर लिमिट थी विच वाज 75%, now it has reduced to 60%. Is it clear? Give me yes sir in the comment section so that we can quickly read out मैं बोलना क्या चाह रहा हूं. RBI revised the regulatory lending norms for small finance bank, reducing the mandated allocated to priority sector by 15%. as per the previous guidelines, small finance bank, earlier small finance bank was required to maintain or to manage or to reach 75% of A and BC in the form of priority sector lending. लेकिन अब इसे रिवाइज किया गया, लेकिन ये जो 75% था उसमें से 40% of the A and BC should be allocated to sub sectors under the priority sector lending as per the priority sector lending prescriptions which I have mentioned over here. अब अगर आप चेक करोगे 18 plus 12 is what? 30 plus 7.5 is 37.5 plus 2.5 is 40%. तो ये 40% this is already prescribed under the priority sector lending guidelines, but left out 35%. It is bank's choice that bank can give this to one or more subsectors under the priority sector lending where bank feels that bank can have a competitive advantage. So here you can see for domestic commercial banks, public sector banks, private banks, foreign banks, what is the limit, sir? It is 40%, and further this limit is 18, 7.5 and 12. Similarly, for small finance bank, this is 75%, but out of this 75%, this 40% is in a similar manner assigned. 40 is assigned as 18, 7.5 and 12%, और बाकी का जो 35% था, that was the bank's choice कि बैंक वो 35% को किन किन सब कैटेगरीज में lend करेगा. It's up to the bank. But now the revision has been done. And in this revision, and in this particular revision, what will be the answer? The answer to this particular point is small finance bank priority sector limit has now been reduced to 60% along with or in line with urban commercial banks. जहां पे ये कहा गया कि ये जो पहले लिमिट थी 35% आप अपनी मर्जी से कहीं भी लेंड कर रहे थे, now it has reduced to 20%. The overall limit which was 40 plus 35, now this overall limit is 40 plus 20, which is 60%. So this reduction effectively aligns small finance bank lending closer to core developmental goals and offers strategic discretion to the banks. So इसमें क्या हुआ, small finance banks को एक तो बेनिफिट ये मिल गया कि उनका प्रायोरिटी सेक्टर लेंडिंग कम हो गया, so that they can provide loan in the commercial sector in order to generate profit, plus they are still different from the rest of the commercial banks like public sector banks, foreign banks, as well as private banks, where we can again call them as discretionary banks or differentiated banks. And this will provide a better balance sheet management opportunity and help them to diversify the credit exposures. So these are the benefits which are going to be recorded by the small finance banks. Clear हो गया point? समझ आ गया? If it is clear, give me yes, sir. If it is clear, give me yes, sir. If you haven't hit the like button, guys, I would request you quickly hit the like button. And do share the link of this session with your friends so that more and more students, they can join us live. Moving on to the next point. Now I have shortlisted all the latest revisions which have been done in the priority sector lending scenarios, because I hope 4 or 5 updates have been given by RBI alone on this priority sector lending, and I would love to discuss all those changes. I'll not take much time. In next 5 minutes, I'll discuss all the major changes. So the first major changes for urban cooperative banks as well as small finance banks, overall priority sector limit has been fixed to 60%, but for micro enterprises 7.5%, for weaker section 12%, and for agriculture sector this limit this is 18% of A and BC. Next revision is done in case of education loan. Now in case of education loan, the limit has revised from 20 lakhs to 25 lakhs, which means earlier under priority sector lending, if you want to borrow education loan, there was a limit of 20 lakhs. अगर 20 लाख से ज़्यादा लोन चाहिए मिलेगा commercial sector में, but now this limit has increased from 20 to 25 lakhs. अगला जो change हुआ, that change has been recorded under the home loan category. In the home loan category, earlier there were 2 categories only. One is metro city, other one is urban areas, but now it has been divided into 3 criterias or the 3 categories. The first one says centers with population more than 50 lakhs. centers with population 10 to 50 lakhs and centers with population below 10 lakhs. तो जहां पे पहले था centers with population below 10 lakhs, what was the loan limit? So loan limit was 25 lakhs. What was the limit on the property cost? So the property cost limit, construction, land, total cost was 30 lakhs. Now this limit has been revised. Obviously sir, real estate आज की डेट में अगर हम बात करें आज के करंट सिनेरियो में, so real estate prices, they are touching the sky. So and if they are touching that sky, then it's quite obvious this revision is for sure, it was required to be done and finally it was done. तो revision क्या था? लोन अब अर्बन एरियाज में मिलेगा 35 लाख का, जहां पर प्रॉपर्टी कॉस्ट हो सकती है 44 लाख. लोन मिलेगा 45 लाख का इन सेंटर्स विद पॉपुलेशन 10 टू 50 लाख, जहां पे प्रॉपर्टी कॉस्ट हो सकती है 57 लाख. लोन मिलेगा 50 लाख का और प्रॉपर्टी कॉस्ट हो सकती है 63 लाख, जहां पर पॉपुलेशन कितनी है 50 लाख से ज्यादा. रिमेंबर दिस इज रियली वेरी इंपॉर्टेंट. फेज 1 में गारंटेड क्वेश्चन एक्सपेक्टेड है, क्वेश्चन पूछे जाने के पूरे चांसेस हैं. अगर आप बात करें रेनोवेशन की, तो रेनोवेशन के केस में पहले 6 लाख रुपए का लोन मिलता था, अब मिलेगा 10 लाख का. पहले 10 का मिलता था, अब मिलेगा 12 लाख का. और अगर आपकी सेंटर 50 लाख से ज्यादा पॉपुलेशन वाला है, देन यू विल गेट अ लोन ऑफ मोर देन 50 lakhs फॉर रिकंस्ट्रक्शन, फॉर रेनोवेशन अंडर प्रायोरिटी सेक्टर लेंडिंग. प्रायोरिटी सेक्टर लेंडिंग में इफ एन ऑर्गेनाइजेशन इज बोरोइंग फॉर सोशल इंफ्रास्ट्रक्चर, तो सोशल इंफ्रास्ट्रक्चर के केस में जो लिमिट 5 crores थी, दिस हैज बीन रिवाइज्ड टू 8 crores. एंड if I specifically talk about the healthcare centers, for healthcare centers the earlier limit was not 5, वो limit पहले ही 10 थी. Now this 10 crore limit has been increased to 12 crore rupees. So remember that healthcare's facility construction loans earlier 10 crores, now 12 crores. For other social infrastructure like household toilets, water improvement at household level, construction of schools, drinking water facilities, construction of parks and whatnot, earlier the limit was 5 crores, now the limit has been increased to 8 crores. In the other segment, that is renewable energy, for renewable energy, if a company is borrowing a loan for commercial purposes in order to produce the energy for commercial level for commercial purpose, the earlier limit was 35 lakh rupees, the current limit is 35 crore rupees, which was earlier 30 crores. तो पहले जो लोन मिलता था किसी कंपनी को in order to borrow the loan so that they can get into the process of green energy production, that loan value was 30 crores. Now this limit has revised to 35 crores. But if you want to install rooftop solar panel plants, or if you want to install any other renewable energy on individual household level, then in case of individual household level, the loan limit is again the same, 10 lakh crore rupees per borrower. This was same earlier, so there is no change in the per borrower limit. But yes, for the company, for the entity, for the commercial purpose, borrowing limit has revised from 30 to 35 crores. In case of weaker section, these are the revisions. Artisan, village, cottage industry, individuals, credit limit is now 2 lakhs, which was earlier 1 lakh. Individual women can have a loan of 2 lakh rupees, earlier limit was 1 lakh rupees. Then we have transgenders are also included in the category of weaker section. They are also eligible to borrow under the category of weaker section, where men and women from the weaker section are included. Now transgenders are also included in the same category of priority sector lending. Last but not the least, if you remember, if a bank is not fulfilling the priority sector lending limits, then the shortfall amount will be transferred to NABARD. If you remember, RIDF, Rural Infrastructure Development Fund, or into SEBI, or maybe to NHB, and these funds will be deposited with NABARD, SEBI, NHB. And these funds which are deposited with NABARD, SEBI, NHB, they will not included in exposure limits for urban cooperative banks. याद आया, अर्बन कोऑपरेटिव बैंक की जो एक्सपोजर लिमिट है, उस एक्सपोजर लिमिट में हम नहीं इंक्लूड करेंगे these funds which are transferred by urban cooperative banks to NABARD, SEBI or NHB out of the priority sector lending shortfall. But against these deposits, NABARD, SEBI, NHB will provide rate of interest to the concerned bank. And what will be the rate of interest? So it will be bank rate minus 2% if the shortfall is less than 5%. It will be bank rate minus 3% if the shortfall is 5 to 10%. It will be bank rate minus 4% if the shortfall is above 10%. If the shortfall is above 10%. समझ आ गई बात? क्लियर हो गया? अब अगर प्रायोरिटी सेक्टर लेंडिंग से कोई क्वेश्चन आएगा आज तक, till date, all the changes, all the revisions which have been done are discussed in this particular session itself. Now you are 100% ready to answer all the questions related to the priority sector lending revisions which have been done in the past. Got it, guys? Clear? Okay. Now let's move on to the next news. And the next news we have is Supervisory Data Quality Index. Supervisory Data Quality Index. I hope you must have heard about the Supervisory Data Quality Index. अगर नहीं भी सुना तो इसका एक context देता हूँ. Context क्या है? We all know that RBI is the regulator of banking sector. Say yes or no. Obviously, sir, RBI is the regulator of banking sector. Now, if RBI is the regulator of banking sector, then RBI is also responsible for the supervision of banking sector. In order to review and assess the better supervision and better regulation of the banking sector, RBI asks the banks to submit their datas on regular basis, to submit different types of datas on regular basis. If I talk about the datas which are submitted by bank, it includes return on asset, liability and off-balance sheet exposure, return on asset, liability and exposures, return on asset quality, return on operating results, return on operating results for I would say the public sector banks only. So liquidity returns, then return on capital adequacy, return on capital, return on interest rate sensitivity. So what is this return? Return means you are showcasing your data. For a scheduled commercial bank, you are showcasing your data. For large credits, it will be called as return on large credit. Then you will be showcasing your data related to defaulted borrowers. It will be termed as return on defaulted borrowers. So basically banks or the regulated entities which are regulated by RBI, they are responsible to present their datas, their current scenarios to the Reserve Bank of India. And if I talk about these parameters, then I would say these parameters are around 66 parameters against which the data is received by RBI from, I would include, if I go specifically, then 36 reports are shared by scheduled commercial banks. 36 reports are shared by scheduled commercial banks. Then if I talk about the All India Financial Institutes, sir, All India Financial Institutes share the reports of, I would say, value around, it is around 11 reports. Then if I talk about the urban cooperative banks, so urban cooperative banks, they come up with the reports such as statement on compliances with CRR and SLR, statement on external liabilities and core assets. It comes on with the report of statement of offices in India, then statement on non-performing assets, statement on segment, sector-wise advances and whatnot. So this total comes out to be around 21. Then rest we have the NBFCs. NBFCs, they also come around with 20 reports. So these are the different reports which are published by, or which are shared or submitted by the concerned authorities with RBI. Now, in order to identify the quality of these reports, in order to identify the quality of datas, the returns which have been presented by all these institutes, RBI came up with. RBI came up with a new term that is known as that is known as Supervisory Data Quality Index. Now, in order to create a single reference for all the supervisory returns and even to harmonize the timeline for filling of returns, all the relevant instructions have been rationalized and consolidated into a single master direction, which was termed as filling of supervisory returns master direction, which was introduced by RBI back in 2004. As per this particular report, it has asked the banks, that all the banks as well as all the scheduled commercial banks, along with that we have the scheduled commercial banks, we have other banks like All India Financial Institutes, NBFCs, they all are responsible to submit the data called by RBI on regular basis. The data should be accurate, data should be presented timely, data should be complete, and all these data related analysis will be done by RBI, and on the basis of this data analysis, RBI will come up with a score for each and every category. So many supervisory authorities as well as central banks all around the world, they are responsible in the supervision procedure similar to RBI. So when RBI is responsible for the supervision, then RBI is responsible to present the quality or to present the status of the data which has been shared by these organizations, and this data status is being shared with the help of Supervisory Data Quality Index. I would say in this manner that the high quality data, it is a precondition for effective risk analysis, which obviously will enhance the efficiency of the supervisory process, which will cover large and highly interconnected banking and financial landscapes. So that is the major reason that RBI first should call the data, then RBI should review the data, and on the basis of the review, RBI will come up with the report that what quality of data RBI is actually receiving from its regulated entities, or from its supervised entities. So let's check it out. So Reserve Bank of India has created Supervisory Data Quality Index that measures the data quality in terms of accuracy. So the measurement of data will be done, how much data is accurate, how up to what level or when the data is presented, whether the data is complete or not, or whether the data is consistent or not. Reserve Bank has presented about this or talked about this scheduled commercial banks related Supervisory Data Quality Index in its master direction back in 2004. If I'm not wrong, this master direction was presented in February 2024. This master direction was applicable on all the commercial banks, excluding regional rural banks. Mark it out, this is very important. So this is applicable, Supervisory Data Quality Index is applicable on, or this filling of supervisory returns is applicable on all the banks except RRBs. It is applicable on all primary urban cooperative banks. It is applicable on all India financial institutes like NHB, NABARD, and SEBI, Exim Bank, NABFID, and it is also applicable on all non-banking financial companies, excluding housing finance companies and asset reconstruction companies. So applicability is very important, and most of the times questions are asked on the applicability itself. Now moving on to the first point. The first point is related to what method is basically utilized in order to present Supervisory Data Quality Index. So Data Quality Index score is presented on the basis of 4 parameters. The first parameter is accuracy, second is completeness, third is timeliness, and fourth is consistent. Accuracy basically means how much accurate data is being shared by the bank. How much accurate data is being shared by the bank. So the accuracy assessment is based on concerns like within and across return validations, unexplained deviations from the past levels and trends, comparison with the published data, observations by supervisory team, and findings during the analytical assessment. So what does it say? सर एक्यूरेसी कैसे पता चले? अब मान लो मैं बैंक हूं, बैंक से आरबीआई ने पूछा बताओ आपके एनपीए का क्या स्टेटस है, मैंने कहा सर माय ग्रॉस एनपीए इज 4%. आरबीआई ने कहा लास्ट ईयर के डेटा में योर ग्रॉस एनपीए was 10%. How come this has dropped down from 10 to 4? Justify this. So this is something which we come across or which we take into consideration in order to identify the accuracy of the data and how this accuracy was or how this was checked or reviewed that the data is not accurate because of the comparison with the published data. So these are the parameters which are used in order to identify the accuracy of the data. First. Second is, if RBI has asked you to fill the details related to the deposit, so in case bank is submitting the report on deposit, then bank should submit the report on savings account. Bank should include the saving account holded by individuals, joint saving accounts, and even bank should include the minor saving accounts. Current account data should be shared, fixed deposit, recurring deposit, all the data should be shared. But let's suppose bank has not shared the data on flexi account. In front of flexi account, the window has remained open or it has left vacant by the bank, then we will say that the data is not complete. And if data is not complete, then obviously keeping that in mind, score will be provided to the concerned bank, to the concerned category. Third is timeliness, that if RBI has asked you to submit the report on monthly basis or bi-monthly basis or quarterly basis or semi-annual basis or annual basis, whether the bank is submitting or the supervised entity is submitting the data as per the timeline or not. If the data submission is done as per the timeline, then we'll say the organization is categorized in the category that is without default. Data is presented or submitted as per the timelines. Second is infrequent, that not always without default, but sometimes default is done. Then the next is more frequent, that means you are doing the defaults or you are missing the timelines more frequently. And then we have the fourth category where you are repetitively missing the timelines based on the supervisory action framework. Last but not the least is the consistency. How much consistent you are with your data, that means how consistently you are presenting accurate data on time to time basis to the bank or to the RBI. So on the basis of these four parameters, the decision or the scoring is done. Now how the scoring is done, sir? In case of timeliness, RBI reviews number of instances of delay in the year. So how many times you have done the delay in the past 1 year, days of delay in each submission, 2 days, 3 days, 5 days, and number of revisions, how many times you have revised the data which you have already submitted. These are the three parameters which are taken into consideration to find out the score for timeliness. Then for completeness, we submission of all returns and mandatory fields. Have you filled all the mandatory fields or not? Have you submitted all the returns or not? तो पहला तो ये क्या सारी रिपोर्ट सबमिट की है या नहीं, that comes for completeness. और सारी रिपोर्ट्स में क्या एक एक मैंडेटरी फील्ड फिल की है या नहीं, that is the second factor. In case of accuracy, within the current period and with past periods data, there is a resemblance. Within the return and between returns validation, there is a resemblance, and other data sources are taken into consideration in order to check the accuracy. Consistency is average accuracy score of the past period, that how accurately you have submitted your data in the past. So on the basis of these four dimensions, SDQI, that means Supervisory Data Quality Index, is created. Now once the scoring is done, the scoring is done out of 100. Scoring is done out of 100, and on the basis of the score out of 100, banks are classified into four categories. Banks are classified into four categories depending upon their score. So what are these four categories? So these four categories include, first category is If your score is between 90 to 100, that is a category termed as good. Then if your score, that means supervisory data quality index, total score, total index score on the base of all the 4 parameters is 90 to 100, it is good. If it is 80 to 90, then it is acceptable. If it is 80 to 90, then it is acceptable. If it is 70 to 80, if it is 70 to 80, we call that score as needs improvement. It needs improvement. And lastly, if your score is below 70, it is unacceptable. Below 70, it is unacceptable, or we call it as major concern. We have a major concern. Now in India, as per the latest data, this time the data which has been submitted by RBI, it included 87 banks data, 87 banks data, and out of this 87 banks data, 42 banks, or I would write this as 87 scheduled commercial banks data, 42 banks data is in the category of good. 42 is in the category of good. 44 scheduled commercial banks, 44 scheduled commercial banks is in the category of acceptable, and only one bank is in the category which says needs improvement. So there is no bank in India, no scheduled commercial bank in India which is in the category of major concern, and majority banks in India, or the majority scheduled commercial banks in India, they are in which category? So their data is considered to be in the category of acceptable category, because their score is between 80 to 90. More than 90 score has been recorded by 42 scheduled commercial banks, but only one scheduled commercial bank recorded a score of 70 to 80, which needs improvement, and below 70 there is no scheduled commercial bank of the country. There is no scheduled commercial bank of the country. This is the latest data for March 2025. This is the latest data for March 2025. Now, if I discuss the score for March 2025, or the latest score which has been presented. So remember that supervisory data quality index for scheduled commercial banks covers 87 scheduled commercial banks and their key returns. As I said, returns are published related to asset liability. So you are submitting the return on asset liability. Then you are submitting the return on asset quality. So then as a bank, you submit the return on operating results, risk-based supervision return, liquidity returns, capital adequacy return. रिटर्न का मतलब बताना, जैसे आप इनकम टैक्स रिटर्न भरते हो कि सर मैंने इनकम टैक्स तो पे कर दिया, लेकिन इनकम टैक्स रिटर्न का मतलब सर दिस वाज माय इनकम, दिस इज माय एक्सपेंडिचर एंड दिस इज द टैक्स व्हिच आई हैव ऑलरेडी पेड. सो रिटर्न का मतलब है यू आर कंफर्मिंग or you confirm to the data which has been shared, which has been received by RBI. So return is, सर आपके पास मेरा डेटा है कि कैपिटल एडिक्वेसी रेशियो ऑफ माय बैंक इज 6.1%. दैट इज ट्रू सर. I am filling the return that my capital adequacy ratio is 16.1%. Clear हो गया? Now, please pay attention on the screen. If I talk about the score, overall scheduled commercial banks. For overall scheduled commercial banks, the score is overall scheduled commercial banks. The score is 89.3. This is very important. 89.3. This is very important. So overall scheduled commercial bank score is 89.3. Out of the scheduled commercial bank, which bank has topped the overall score? So the overall score is topped by small finance banks. It is topped by small finance bank. But if I go category wise, In case of completeness, public sector bank has topped it. In case of accuracy, private banks has topped it. But in case of timeliness and consistency, small finance bank is on the top. So that is the reason overall highest score is backed by which category of bank? That is small finance bank. But scheduled commercial bank category score is 89.3. Now out of this table, फिर आप पूछोगे क्या याद करना है? So this is for your reading. And I have done this hard work for you. This is what you need to learn. So you need to learn the overall data for the scheduled commercial bank. Then you need to learn public sector bank is outperforming out of all the other scheduled commercial banks in the category of completeness. Don't remember the data, just remember that public sector bank was outperforming or outperformed in completeness category. Public sector bank ke baad private banks they have outperformed in the accuracy category. But the small finance banks, they have outperformed in timeliness as well as consistency, and small finance banks, they are on the top rank in terms of overall score. In terms of overall score, so the highest score is backed by small finance banks. Even I have given you the flow. Highest score is backed by small finance bank. As you can see, this is decreasing in decreasing order. So if someone asks you the highest supervisory data quality index has been scored by, it has been scored by small finance bank, then private banks, then we have foreign banks, and the lowest score is backed by public sector banks. So you must remember the overall score of public sector banks. This is important. This you need to remember. Overall score of small finance bank is important. This you need to remember. And overall score of scheduled commercial banks, that is 89.3, is important, which you need to remember in comparison to last year, which was 88.6% as of March 2024. As of March 2024. Lekin I have a data on quarterly basis as well. ये मैं already आपको बता चुका हूँ. Out of 87 scheduled commercial banks, 42 were in the category of good banks because their score is 90 above. Their score is 90 above, and here it is in the category of acceptable. Score is 80 to 90. Only one is in the category of needs improvement because the score is in the value, or score is in the range of 70 to 80. This is the final slide of this particular session. The final slide says, as you can see, overall scheduled commercial banks, they were 88.6 was the score in March 2024. Now this score dropped down to 88 in June 2024. Then September it was 88.1. In December it improved to 89, and finally in March it has improved to 89.3. So you can see that there is an increasing trend of supervisory data quality index for all the scheduled commercial banks, and this increasing trend is witnessed in all the categories except one, that is completeness. In case of completeness, there is a downward trend. Rest in all the categories for scheduled commercial banks, for all the scheduled commercial banks as a whole, the supervisory data quality index is increasing for overall basis as well as for the categorical basis. Last but not the least is a news which is very small. I'll just take 2 minutes to complete this news. But before I move to the last news of the day, guys, if you have any doubt from this particular topic, that is supervisory data quality index, कोई भी doubt है तो पूछ लो. If you have any doubt from this data quality index, you may ask, please. Any doubt from the data quality index part? No? Okay then. So last news which I have for you all is, guys, recently RBI has given a statement And this statement is basically the revision of the prior statement. What was the prior statement? As you can see, in July 2024, I'll first jump to July 2024. In July 2024, it has been said that the Brickwork ratings, it has been said that Brickwork Rating India Private Limited. So this particular organization, which is one of the rating agencies of the country, which is responsible to provide ratings for different aspects, but there was a condition. The condition was banks were permitted to use the Brickwork Rating India Private Ratings for risk weighting their claims for capital adequacy purpose, subject to certain limitations. What were the limitations? In respect of fresh rating may be obtained from the Brickwork Rating India Private Limited for bank loans not exceeding 250 crores only. So if you are borrowing loan for more than 250 crores, then bank cannot use Brickwork rating. In respect of existing rating, CRA may undertake rating surveillance irrespective of the rated amount till residual tenure of such loans is there. So एक कंडीशन लगा दी गई कि सर ब्रिकवर्क रेटिंग वाज नॉट डूइंग वेल और उनके द्वारा दी गई रेटिंग्स पे ज्यादा ट्रस्ट नहीं किया जा सकता. अब इसी स्टेटमेंट को आरबीआई ने वापस ले लिया. आरबीआई सेइंग दैट ऑल द रेटिंग्स which are done by Brickwork ratings are accepted and they are allowed, or banks are allowed, or the regulated entities are allowed to use the Brickwork ratings without any restriction. To use Brickwork's rating without any restriction. So this is the latest and the smallest update which has been given by RBI. So I hope each and every point जो हमने आज discuss किया, it's crystal clear. Don't forget to like the session before leaving, and you can find the PDF of this session on my Telegram channel, and with this PDF you will find the practice question as well. You will find the practice questions based on today's news. So you will find the practice questions based on today's news, and I want you to go through with the PDF, practice those questions and share your answers in the comment section. You must share your answer in the comment section so that I can get to know you are revising, you are attempting all these questions. Thank you so much for joining, guys. We'll catch you in the next session. Bye bye, take care, good luck, God bless you.